Hi, this is Elliot WaveSage. I want to go ahead and do a market update. Like always, none of this is financial advice. Always do what's best for you. So, if you watched my live stream yesterday, I gave you kind of a quick overview on the market. Big picture, the market should still be supported for higher prices. I know there's a lot of bearish sentiment starting to emerge especially after Friday's sell-off. Netflix and Tesla, has reversed somewhat on a lukewarm earnings report. But I do believe everything is still supported. There's a lot of dip buy-in money that wants to come in the market, wants Nvidia lower, and they're ready to pounce. Just like people are ready to pounce if housing were to go down. So there's so much money ready to come into the market still support it into there's a new narrative that's just so horrible that nobody would dare enter the market. And we don't have that black swan. There is no massive recession. There is no China invading Taiwan. We don't have nuclear bombs going off in Ukraine. We don't have a black swan. Without a black swan, there will be no massive crash. It's just not going to happen. There will not be a technical crash because people are ready to buy the dip and the computers don't allow the market to crash and go straight down. They like to go and stop at pivots at levels and let money come back in, and then the narrative changes. We go to new highs. So the market still is supported, I believe, fundamentally and technically. The Dow is important. It took this pivot in December here, which was expected. My videos forecasted that this would happen, and it's happened, and I now will forecast an acceleration higher in 3 of 3. Ultimately, we could see new all-time highs and could even see Dow at 38,700 before we could start to get nervous about the technical setup being primed for a drop, a pretty significant drop. But right now, the market really is supported. So even if we have a little bit of a pullback, it's just another buy-in opportunity. Okay, so that's what's happening in the market. And yes, everyone, I want it to crash. It should crash. It doesn't deserve to be higher. I'm so smart. I'm gonna short this market because I just know that the PE ratio is too high on the SPY, and the market doesn't care because the market has a casino-like effect. There's a lot of money that comes in, and when the casino is open, people buy the dip. They don't short it. They buy. That's the condition until proven otherwise that you have to put up with. So I believe we're probably in a 4, and then this impulse should be ending from here, and then we'll get another pullback. And again, it could always be wrong this short-term time frame. So some kind of sideways choppy action, but it's a viable dip going into a 3 of 3 moment in the Dow. The ES, let's go to the SPY. SPY is also, again, this could be a WXY, and if it is, then we want this 3 to finish, and that could finish at 480. So it looks like even if we pull back, we're going to get more highs in the Dow and the SPY, and again a 1, 2. And I wouldn't really recommend trading shorter time frames like this, but the count looks something like this: an extended fifth wave. Okay, more upside, more upside. These are buyable dips that are occurring. This 4 could be done here already, and we rip higher on Monday. If we go down in 4, that's okay too. It could do something like that and come back down. And if it were to do that, I would relabel the count like this, and then have it like that and like that. So just it depends on where it's heading. So if this were to break 451, then you have a good dip buy at 449.38, 446.39. This is the setup, but it may not happen like I showed you earlier. The triple Qs, this is starting to become close to the end of its impulse. As you can see here, we already finished this third wave. Unless we're still in 5, we could still be in 5. Keep that in mind. It can extend. So if it's 3, as you know, in a W, X, Y, or an A, B, C, 3 waves. So the bears would want to see this just collapse all the way down in a bear market. But to do that, we would need the other instruments to give way. We would want to see rates higher. We'd want to see the dollar strengthen, and we would want to see the Dow Industrials reverse lower. And none of that's going to probably happen. So more than likely, you may need to start thinking technology is not, not like this, but something like that. And we peak up here. I know it's hard to believe, and no one thinks the market should deserve that. But I'm just telling you what I think is going to happen. But based on other instruments, I do think that you could see a bigger pullback, maybe down to 358, and then you rip in the 3. So and also the SPY could even be the same thing here, where this is a whole nother cycle, and we rip in 3 and we blow through these targets into the expanded flat area like the Dow. That would sync up the market with the Dow in a 3. It's pretty clear this isn't any 3 or 4 or 5 here, so this could sync up with the Dow, and we could actually have the entire market ready to do a massive pump. And then this would be the end of the move. And when would I be more bearish in the market? When the IWM is at 220, the Dow Industrial Average is at 38.5, like I showed you here, 38.6, around there. And the SPY is at 480. Triple Qs more than likely would break new like 420. But I'd like to see the Dow go higher. The Dow is the key now to the entire market. So is the IWM. The market can't crash if these are going to go higher, guys. It just isn't going to happen. You're not going to see technology go crash and the Dow go up. It won't happen. So my guess is, maybe technology sideways and you get a rotation into the Dow and Russell here, or everything melts up. But the market is set up for buy the dip, in my opinion. And like I always say, do what's best for you. Now, Bitcoin, I did an update earlier on Bitcoin yesterday on my live stream. This could be the low because in an expanded flat, you need 5 waves down. You have 5 waves here. This low has not broken despite multiple opportunities to break it. If we can break 30,464, which we almost did, then this is starting to get negated, this drop, and then this 2 is already done, and we're about to again another 3, and this is due a wave 3 of 3. So oil is still supported. I do believe oil is still going to go higher and has to finish these impulses. I do believe C is coming up. I wouldn't be surprised to see $100 oil before potentially a massive reversal, coinciding more than likely with the market reversing. Something like this is what I'm looking for. Gold, to me, is in this fourth wave, it probably needs 5, but it could also be a 1 2 1 2. It could be a 1 2 1 2. We're about to come out of this reversal pattern, so I wouldn't be bearish on gold. And then silver, same thing, 1 2 3 4 5, and then down and out. And it has its own reversal pattern we're staring at now here. Ready, you know. So get ready, breakouts coming in gold and silver. And then the 10-year, let's see, the 2-year first. So the 2-year, I was probably one of the only technicians that called this false breakout online, and I did. It's rejected, and now we're in 2, and we should get a puke lower. Is this for what is this telling me? Maybe the Fed is not going to raise rates. Maybe they're going to be done. Maybe they're going to be too dovish. Whatever this is, I think the market's going to perceive whatever they do with lower rates. Now the 1 year shows an interesting chart in TradingView. I don't know if this is legitimate price action or not. If it's legitimate, then you have a bull, a breakout on a 1 2 1 2, and then this could come back to 4 4, and then it opens the door up for a 3 F3 move higher. So this if this is legitimate price action, then you've got some much higher rates coming in the 1 year. And then eventually the 2 year as well, after this consolidation finishes. My guess is when we're down here is when the market would be at a peak, and we'll be ready for that massive leg lower that could develop, or the retest of the low. But this wave, I think it's when we go into this wave. And maybe it would be right around here. So perhaps the market support it, but then when you're into this area, then it's like panic in this area. Now the 10-year has not broken 3. So if we could break this channel in 3, then it's actually a corrective move. And that would actually tell you that the 10-year may not make 4-3. So we could see a deflationary curve develop on the long end and an inflationary curve on the short end. So it's predicting deflation. So it hasn't taken that. So if this happens and we only have a corrective move, then that could push rates all the way back down and even perhaps break this low. Of course, this would be very bearish for the market in the long term. This wouldn't be good, healthy, but it would definitely propel the indices to a certain extent, and then it would cause a collapse later, like we saw here. Whereas you could see October 18 to August 19, we saw some upside. We saw some upside, and then you saw the collapse. So again, you would see some upside, consolidate, and then you would see the collapse. So I think this is important. If we could take this high, then that's very significant technically, but we haven't, and the 30 year hasn't either. So if we can't take this high, that means to me it's a corrective move, correcting that 30-year cycle. It may be done, and we may be starting a new cycle, but this is the long end. The short end doesn't show that. The short end shows another swing higher to maybe 8-9%. And then the 1 year, we could see rates up to 9.3, 10.5%. So it's that's what this is telling me. So inflationary, short term, long term, deflationary. So take it for what it is, but I do believe that we have this pullback coming, and a pullback coming, which should support the market. Lower rates supports tech. Dollar index also shows that it wants to continue lower. Again, 1 2 1 2. Now this could be another 1 2, and we could open up a 3 3. I don't think so, but although look at that RSI reset. Very interesting here. If I just look at that cycle, it would be better to call this a 1-2 like that, just based on the RSI. So this at some point is going to have its 3-3 moment. So again, if the dollar was trading down here, I would be more bearish on the market, but it's not. So that's why I'm not so bearish, but the bearish time will come. The bears will have a moment that they've been waiting for when X is set, and it could be catastrophe all the way down, like I have here, in essentially a crash correction, because in a flat, that's what this leg does. The final leg is not overlapping, it's impulsive, so it's essentially a crash. That could happen. That could still happen. New lows can still happen, even if we make new all-time highs. But that time to be defensive, I don't believe is quite upon us yet. But I think we have a more upside, and then I do think there'll be time to get defensive. And again, could this be a major bottom, and then it just is like that secular bull market continues? It can, but this is going to happen. This drop will happen now, but it can go to new lows. It can do that. So when this cycle does get to the danger area, I would be more cautious. But right now, I believe the Dow is going to trade in this area. The Russell is going to trade up here. Again, oil higher, gold and silver higher, the dollar index lower, and the 10-year and 2-year lower. Those are all bullish stocks. Those will cause most stocks to go up, not go down. But when those cycles are finished, the market would be a lot more dangerous to be in long positions. All right, so we'll go from there, and we'll see how things go, and that's the market overview. And so dips are for buy-in, and it's tough to say where exactly we are, but I believe we're pulling back, and it's another buyable dip moment. The 4-hour hasn't reset yet. It looks like it's about to on technology, so want that 4-hour and to reset. Looking at Bitcoin again, still in the bullish cycle. The 4-hour wants to break higher, just hasn't happened yet. Okay, I'll just kind of click through some things I'm looking at. Let's look at technology. So everyone likes this AI stock. So again, looks impulsive, and now it's correcting that move. It could be an A, B, C. It hit 35, but I believe it's again another viable dip. And again, looking at the mega cap, like Netflix is a 4, Adobe is in a 5, and then a 4 and a 5. Apple is in a 4. Tesla is in a 4. Gonna have a 5. Google is in danger area. If it breaks 115, it could see it could lag the rest of the market and still have new lows. Breaking A here, not that bullish. Amazon's interested. It's finished 3 waves, so this could start to collapse too. So Amazon and Google are, I would say, dangerous to trade out of the mega cap. If Amazon could take this high, then it's a 1, 2, 3, 4, 5, and then that's the bottom. That's the generational low. And then Microsoft is in 3. It looks like it's going to have 5 and finish. So these are quite ready, and then AMD could make it to 96 and finish, and it's 1, 2. But since you have 5 up in AMD, we need another 5. So that's bullish for the overall market. Nvidia, everyone's trading, I believe, is in this 4. I bet we tag 500, and then we drop into back to 370 and continue higher. Again, we've impulsed off the bottom, so no matter what we drop here, we need another swing higher. Then the market is ready to crash when we get that third but swing. But see, these are telling you that the market's still going to advance higher, and then Facebook is done in 3, and it should pull a 5 and then correct this. So that's kind of what I'm seeing. I mentioned Etsy before. Etsy's trying to break out of this. It did break this high 1-2. This could be another 1-2, 1-2. A lot of options here, but I do like it. Mercado Libre hit the buy area almost to the penny and V bottoms. Again, very bullish. Shopify should be doing a 4 and a 5 and wrapping up. And like Magnite here, a breakout of this inverse head and shoulders. And looks like it's back testing. Should still see extension as it breaks out of this bottom pattern. And just kind of looking through the market to see if there's anything. Zimmer, Zimmer, this was a buy area. It looks like it is trying to reverse out of that. So it's interesting to see. People have asked me about Snowflake, and I really didn't like trading it, but now if we look at it, this 4 is starting to extend. It really is coming. If we can break above 206, then I would call that the low. I think Palantir has a finished cycle, like AI is finished. Up 5 here, and now is pulling back. But again, it's just another dip to buy. Now you have an impulse. We should take a whole nother swing. It should see $27 by the end of the year. Robinhood, pretty much going according to plan. And DraftKings, a lot of 4s and 5s to play out. That's looking good. DNA was another one I gave you guys earlier, and that's just continuing to extend. That's probably a 1. Could be a 3. It could be this 3. We'll just label it like that for now, more conservatively. Space is another one. Coming out of this wedge, it's, sellers are losing the battle. This was another one that's double correcting into in a 1-2-1-2 setup. And QSI was another one. I believe we're in this 4. It should get 5 and then a bigger pullback, but it should stay supported. Then the green stocks were doing okay. Plug Power should be coming out of this correction, out of this massive wedge. Should go higher. For solar, is a tricky count here. I do look at this as an impulse with 3 waves up. I'd be careful in it, but it wouldn't surprise me to see it fool the market and start to go higher. But again, this just doesn't look like it looks 3 waves to me up. So I wouldn't FOMO into that unless that 232 breaks. And then in-phase energy is another one that seems to be popular with the day trading community right now. And I still don't like to trade that. And it just looks like a massive impulse with some kind of connector wave that's going to have another lower. Just don't like it. And the RK, we took that high and easily came out of that. And so now it's pretty clear you're in a 1-2, 1-2. We're now in wave 3. This should go higher. Next target is 60. ARKG took this high, so that should continue higher. So these everything's just kind of reversing. China's doing pretty well as well. Let's go to like the Hang Seng real quick. 1-2, 1-2, 1-2. So it's it needs a big explosive move. That would tell me the dollar's about to really fall off a cliff. Weak dollar. Maybe is China going to introduce stimulus? That's been talked about. They're going to have a massive stimulus. That would definitely be inflationary, and especially if they do it right when the Fed announces they're going to stop, rate increases. This could cause that wave 3 of 3 moment in China. So just keep that in mind. So I think I covered everything I need to at the moment. There's a lot of opportunities out there. Uh, some beatdown stocks. Let's go to my blue list. Some beatdown stocks that I'm watching. If I can find anything good, because a lot of these aren't just sell-offs, just aren't that attractive. Wolf. If I can get that at 57, a great opportunity. Trade desk at 75. Wingstop at 159. Again, these things may not happen. How's AbbVie doing? AbbVie at 125. mRNA at 92. I think Danaher is another one at 208, and then Pfizer is another healthcare stock that's in an area, and so is J&J as well. So some healthcare opportunities are out there. So Pfizer is an interesting one. $34.88. We're just a few bucks away from a potential bottom area for a massive investment opportunity. Okay. Want to see more of that divergence erased, so probably go a little lower. And then the other one is Johnson and Johnson. Someone was saying Baxter the other day. Yeah, that looks like now it's reversing. This downtrend's over. So I think certain healthcare stocks do offer some good opportunity right now in the market, and if there's pullbacks, Russell Technology, depending on what you're into. Okay, so I'm going to wrap it up, but I think we have a very interesting week of very choppy price action. Ultimately, should be supported if the market decides to dump in this 2, or perhaps, like I said, that could be too bullish. Perhaps it isn't a 2. Perhaps it's a 3 and a 4. But whatever it is, it's a buyable dip. I just don't see the market crashing down. Not yet. Anyway, that's all I've got, and we'll see how it goes next week for everyone.